Welcome to Multiple Perspectives. This is your weekend view, where we explore the latest trends and opportunities in real estate investment. I'm Daniel Brereton. Today, a relevant headline relating to tech layoffs and the ripple effect it's had on certain real estate sectors. Only 1 month into 2024, the tech sector is seeing a significant wave of layoffs, a trend that continues from the prior year. Major players like Google, Amazon, Microsoft, the Magnificent Seven, as they're called, are slimming down their workforces. And this isn't just about numbers, it's a strategic shift, and that's a shift towards AI and adapting to the post-pandemic economic environment. The office real estate sector was already undergoing a transformation due to the rise of remote work and flexible office arrangements, and these factors only accelerated during the COVID-19 pandemic. Layoffs compound these changes by further reducing the need for physical office space. Recovery in the office sector has been slow, but with increasing distress. One response by CRE operators has been to acquire assets traditionally built for use as office space and reposition them as living spaces, either in the form of condos or multifamily complexes. And while this pattern is playing out in many markets across the nation, each region has its own unique story. In tech hubs like San Francisco and Los Angeles, we're seeing high office vacancies and a surge in subleasing activities. Migration trends have shifted as well. Traditionally, job availability has been a key driver of migration, with individuals moving to urban centers or specific regions in pursuit of employment opportunities. However, with the advent of remote work and the recent layoffs, we might see a shift in these patterns. People may opt to move to more affordable or desirable locations, especially if their jobs are no longer tied to a physical office. This could lead to increased demand for residential real estate in suburban or rural areas, or in cities with a lower cost of living. Investment opportunities in regions that benefit from the decentralization of the workforce, particularly in multifamily developments or single-family rentals, could be increasingly lucrative. Tech layoffs are more than just corporate restructuring. They're reshaping the way we use and perceive office spaces. For real estate investors, especially those focused on private market opportunities, like those offered at EquityMultiple, these trends present both challenges and opportunities. The decline in demand for office space might make office real estate less attractive in the short term. However, it also opens up opportunities for redeveloping or repurposing office buildings, potentially converting them into residential, mixed use, or specialized commercial spaces. It's important to stay informed about these trends and adapt investment strategies accordingly to mitigate risks and capitalize on emerging opportunities. That's why our real estate team tracks each market and apprises our investment committee and investors of market conditions as they shift. And if you want to stay up to date, click the link in the show notes for more information. Thanks for tuning in to The Weekend View. Join us next time for more discussions on the dynamic world of real estate investment. And with any other questions, reach out to ir@equitymultiple.com. See you next weekend.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.